Thank you so much for being here, Salvador, and floor is yours.
Thank you, Francesco. Good afternoon, and thank you for staying till the end. I know it's been a long day and competing with many activities. So thanks for staying here. We first of all thank you to Vara for this opportunity to be part of this discussion. I handle the government and policy work for Visa. I'm a disclaimer, I'm not the crypto expert. The crypto expert is my colleague, Mila Mokhbadieva. I asked her to join the panel because we want to keep this very interactive, so I don't want to present too much. I will keep track of the time, and you tell me. But it would be probably good to have a dialogue. Mila will be able to help me with a lot of your questions. And hopefully will give you a good indication of what Visa is doing, but more importantly, how we see the crypto, the CBDC space, and stablecoins. First of all, if you don't mind raising your hand if you are familiar with what Visa is doing in this space, or if you have no clue. So it's a mixed bag. It seems that a few of you already know, so we'll probably be more specific and trying to say a little bit more. Visa has more than 6 decades of operation. People still think about Visa, about cards, and it's more than cards. We actually try to avoid the term cards. We're referring to payment credentials. And to be relevant in this space and be able to continue connecting all our stakeholders, we see the need to really go deeper into this space. And we are working on solutions. We are talking to policymakers, providing our perspective. So what I'm going to share with you today, it's a little bit about the evolution of how we see digital currencies, more specifically CBDC, which is what we were asked to share, the type of collaboration, the type of activities that we have been doing on both retail, wholesale, and we are packaging wholesale together with tokenized deposits because it's part of the bigger discussion. Closing with a little bit of the work we're doing on stable coins, and then opening it for a conversation, any questions you want to pose to us. First of all, I would like to start with this very interesting quote that I heard recently from Yuval Noah Harari. Probably you already know him. It's in a very interesting podcast based on a presentation he gave to the IMF a few weeks ago. And based also on his latest book, Nexus, and I thought it was relevant for this discussion. He talks a lot about how the humans have evolved around the concept of truth, about trust, and how trust allows to make stories compelling, that really attract collaboration in the humankind without necessarily knowing each other, and how at the end money is a very powerful concept, and in his words is the most successful story that humankind has developed. He obviously articulates it better than what I'm telling you, but he gives a pretty strong sense on the importance of money and on all the challenges and implications from AI. If you have a chance, it's a very, take a look, listen to that podcast. It's very insightful. And you already know about this, but very briefly, what we have seen in the last decade is quite impressive. If we put a timeline with the evolution of money, money is still the 3 elements that we have been discussing today: unit of account, store of value, and means of exchange. And for Visa, obviously, we look at the means of exchange perspective from money, from the evolution of money. We believe it's a key contributor, an inherent element to be successful, to continue providing that means of exchange for all activities. And what we have seen is obviously an acceleration of all the impact with new technologies and how money will evolve in the future. And the concept of distributed ledger technology has really created a very significant impact on how we all understand money. This is, in a nutshell, how we would package the latest evolution in the last 15 years since Sakamoto's paper on Bitcoin, the emergence of stablecoin 10 years ago, and the policy response to Libra, to Diem, which was CBDCs to a large extent. And what we're seeing more recently is also the response from the private sector with tokenized deposits. So everything is closely intertwined. It's part of the evolution that we have seen in the last decade. And if we had to be more simplistic, how fiat money has the public dimension under this new DLT world with CBDC, both the retail and the wholesale version, but also the private money that is evolving through stable coins that we discussed before, to also tokenized deposits, that it's an increasingly relevant topic. So moving to retail CBDC. And this is obviously high-level explanation based also on a paper that the BIS released recently, which tries to summarize the motivations, the design discussion, and the challenges for retail CBDC. Every country is different. Every country has its own challenges. So it's hard to really put one-size-fits-all when we are discussing CBDCs with governments. I mentioned before the response to Libra, and to a large extent what we see is obviously the need, the desire from regulators, from central banks to maintain relevance in a cashless economy where they're increasing private money solutions. And the financial inclusion part, which is probably less relevant for developed economies, but it's still a big discussion in developing countries. Hard to argue that it is the silver bullet for financial inclusion, and I think there's a realization that technology alone will make a difference for financial inclusion, but it remains a big motivator. And another one which is still very significant, probably more than financial inclusion, is payments infrastructure. Depending on how each country has developed its retail digital payments infrastructure, you can see the discussion around bringing more competition or solving for cross-border, which I will talk more about it. And also as a preamble to the next session, cross-border, it's a big use case where there's a clear roadmap at a policy level on how we need to address the challenge. Design, without going into a lot of details, again, this is a summary, the type of access that regulators want to give to CBDC. Is it going to be account versus token-based? Who will have access to CBDC? The limits, a lot of discussion that we have seen at the beginning in particular about a central bank operating a CBDC distribution or relying on commercial banks, what they call a second-tier approach. I think the decision is clear. It has to be with commercial banks in a second-tier scheme, and they need to establish some type of caps on the balances, even on the daily transactions that can happen with a CBDC. Interoperability, also very important. Interoperability can be understood in many different ways, but we realize, and that's part of the conversation, that there has to be interoperability across different payment rails to really solve the needs of use cases. That's where we are also coming into place. I will illustrate it with one example. And the technology part, it's relatively more simple, but nevertheless, from a policy perspective, does the regulator want certain programmability for specific use case? In some cases, government disbursements to address specific subsidy and ensure that the money goes to a specific need, or the use of offline capabilities that in many developing countries is needed. It cannot be 100% online. And the challenges are obviously all types. This is just a simplification. We see a debate in many developed countries on privacy. There's a lot of public skepticism in Europe. Those who come from Europe can tell that better than me. Big debate on the digital euro. So it's not only at a philosophical, political level, it's a practical level in terms of, at the end of the day, is there going to be enough trust on a CBDC? Are people really going to use it? End users for payments, consumers and merchants in particular. Financial disintermediation, but there are some solutions to mitigate that. And related to what I was mentioning, the level of usage of traction by end users. So these are part of the dimensions that regulators need to talk and reflect on what, at the end, they want to achieve. And this is a map, high-level map, that we put together. We're using the CBDC tracker, but without going to all the cases, just illustrate cases that are live, the early adopters, Bahamas and Nigeria, the so-called pilots, but they're quite significant, India and China are huge, and there's very interesting information coming from there. We included the digital tenge in Kazakhstan because it's less known, but it's quite advanced, and that's where we have been also participating. And the ones that are still at a research discussion level in North America and Europe. So different stages, different speeds, but the world is moving into that direction. At the end, it's devil is in the details, so it is what is happening on the ground, the use cases, what the impact is that we have to pay attention. I forgot to mention Kenya. We included it because it's one of the few countries where there was a public consultation on CBDC, and after a year of receiving comments, the central bank decided not to pursue it and put it on hold. It might come back later, but it was a very diligent, I think, well-structured public consultation, and be clear, rather than extending forever the discussion. Visa has been trying to document also the effects in some of these early adopters. In March last year, we conducted a study in Nigeria with the e-Naira, and you can see the key findings in this slide. No surprise, I started mentioning trust, and we have been referring to trust, how important it is. At the end, these three dimensions reveal the lack of confidence, of trust from the Nigerian end users on the e-Naira. Whether it was the level of acceptance, how they could use it, the communication. I understand that at the beginning there were also some fraudulent activity. People were not sure if they were downloading the right app or not. So from the very beginning, very challenging. And in general, the sense that it was not adding any value, and they are heavy adopters, as you know, on crypto. And the IMF has a very extensive documentation on the first year of experience with the e-Naira, with many interesting learnings, and obviously something that has to be corrected, and hopefully it will improve, but not the best success story for sure. Here we bring, I mentioned the digital tenge in Kazakhstan. Why? It's interesting because from the very beginning, the regulator realized that it had to have interoperability. And they looked at the international networks, both Visa and MasterCard have participated in the pilot, using debit cards associated to the digital tenge funding. So it has been an interesting case of adding from the very beginning this interoperability. The Kazakhs are still reviewing the use case of the digital tenge and how it will be moving forward, but a very, very interesting case as well. Very briefly, because I'm conscious of time, this is the latest summary of the survey from the BIS 2023. And it shows a slower pace of enthusiasm on retail CBDC. If you look just at the green for retail, which is whether it would be adopted in the short term or medium term by 2030, it was growing. In 23, it started diminishing. These are just surveys conducted among 86 central banks. But there's a realization that obviously the implementation is very challenging and that they probably need to pause, reflect more about what to do with CBDCs before accelerating it. And the discussion is moving to wholesale. And I will mention a little bit more context on why is that. But clearly, there's also a realization that wholesale probably has to be a more focus of attention. Also, I don't know if you're aware, but the IMF is also getting very involved in the CBDC discussion. And this recent assessment from the Dominican Republic caught my attention because it's a very good assessment of how at the end the regulators have to look at the bigger picture, the bigger infrastructure, payments infrastructure that exists in one country. What it's highlighted in red is the recommendation that they also need to look at the rest of the payments infrastructure, making changes, adjustments before moving to a CBDC. And this is an exercise that they're going to be conducting more often to also bring a reality check to what extent a country really needs to move to a CBDC. And I mentioned cross-border. There's also an emerging research and exploration from BIS. It started with this project, Icebreaker, Israel, Norway, and Sweden, testing, very complex, but starting to test how a retail CBDC can be transacted on a cross-border basis. The IMF released the notes that I'm showing here on the right-hand side. And again, they bring the bigger discussion that it's not only a question of technology, it's a question of how to address governance, settlement infrastructure, rules, and interoperability among countries where you have very different technical solutions and standards. So that makes it particularly challenging, but it's part of the ongoing discussion to move beyond the domestic space, which has been the dominant flavor on retail. When we look at wholesale, this is a summary of many of the BIS projects that you might have heard of. They really started moving after the G20 released in 2020 the roadmap to make cross-border payments more efficient from speed, cost, transparency, inclusion perspective. And it's an evolution. They have been testing Singapore. Interestingly, it has been in most of the cases, and they have been testing how to solve for cross-border. The conclusion at the end, it's in mBridge, which is the most ambitious one, is to have a multi-currency, multi-country level of integration is the same that I was mentioning, referring before. It's not a question of the technologies, how you solve for all the other challenges, compliance, settlement infrastructure, governance. And mBridge is open now to many countries. The UAE was one of the founding participants, but it's probably the most developed and most complex project that the BIS has been doing. But interestingly enough, there's also a realization, and probably for the same reasons that I was mentioning before, on the need to bring the private sector and start testing the tokenized deposit, more the private money section. And we want to bring this to your attention because it's a very ambitious, bold project that the BIS is bringing. It's not proof of concept. According to the BIS, they want to establish a prototype for the coexistence of private and public tokenized money, and they open it to the private sector. So Visa is participating in the project. Very complex. It's being led by the Institute for International Finance, more than 40 private sector participants. But we are very excited on the possibility to really contribute, bring some of the lessons learned from our 6 decades of operation, and start testing a bigger project for cross-border payments. Part of the reason why Visa jumped into this project is the experience that we have had. In Hong Kong and in Brazil, we conducted, as part of sandboxes agreed with regulators, the need to test some projects. I won't be able, I realize I'm talking too slow. So these are just the benefits that we observe, the learnings, and how by partnering with our banks, we believe we can bring this to a more global, interoperable space along the lines of Project Agora. We also launched recently what we call the Visa Tokenized Asset Platform, also from the learnings that we have developed. This is a sandbox. It will be tested in Europe with one bank as part of the new space created with MiCA. And it's going to be very interesting to start testing how we can support tokenized deposit, but also stable coins through our own tokenization platform. Very rapidly on stable coins, as I mentioned, we are looking at it from different perspectives. From a thought leadership perspective, we published a recent report. In the sake of time, I'm going to jump to it. It's available if you want to take a look at it. It's a survey conducted in 5 emerging markets to really check what is the use case for stable coins among some consumers. 50% are not using it for crypto trading. So something that was mentioned before today, we are confirming that there's a lot of non-trading benefits for the population. We included India, despite what we heard this morning, is still a very active user of stable coins. And we also have a new dashboard that was released in April this year to also bring more information, more transparency on stable coins, quantify how much is being traded on a monthly basis. And this is pretty much just some general key takeaways on how we see the future of money. If we have time, Francesco, we can open it for 1 or 2 questions.
We have probably 1 question. Yes, please. Do we have another one?
Yeah, we can give it.
I just wanted to ask, maybe I heard it incorrectly. You concluded that the commercial banks would be essential partners in this process. Why did you conclude that when the evidence suggests the alternative? For example, M-Pesa is one of the most successful money schemes in the last 30 years, and the commercial banks, when they get involved, will slow the process down and try and kill it. So why did you suggest that the commercial banks should be essential partners?
Let me probably take this one. So hello again, Mila Mohammadieva, and I'm leading crypto solutions for Visa, CEMEA, and Europe. Even M-Pesa is relying on a commercial banks on the back end. And this is the key story. In order to push the transaction, mobile money to mobile money, at the end of the day, there is a settlement. And settlement is done through the commercial banks. So this is the first part. Yes. I've spent with M-Pesa 2 weeks, 1 week ago. So yeah, and this is one of the challenges which is happening.
Maybe now, but it was built entirely with back-end technology inside Safari.
So as of today, it's different. And the thing is that still, it is the part of the general ecosystem. And when we speak about the evolvement of this landscape and how it can look like, even speaking about the wholesale CBDCs, retail CBDCs, one of the key learnings which we see, and we're quite transparent with the central banks and with all the ecosystem players, that ecosystem should not be fragmented. The more it's interoperable, the less frequency we see and more use cases and general ecosystem development is empowered. And this is actually our key learning statement and something we share with the ecosystem.
Fantastic.
on the front side. On the back end, they really rely on the commercial banking.
Or at least now. But Mila, think. Clearly, there is a lot to talk about. This is a very heated topic, and well, thank you so much for the question, and I would certainly invite the audience to give a big round of applause for both Mila and Salvador for being with us today.